All right, ladies and gentlemen, it's a Forex Daddy, Zambia's finest trader, Bliss $1 billion. And today we're going to learn about the types of charts. So whenever you're trading, you've seen when we're learning about how to use the MetaTrader 5, we've seen candlesticks, we've seen the bar and all that. And then we're just going to learn more in detail, understand the candlesticks and all that. I know by the time you're looking at that, you are probably thinking, oh my god, what's this? So this is the lesson that is going to actually help you understand those things. So without wasting much of the time, let's get started. So price in the financial market can be shown by different ways. Some of the ways through is the bar charts, the line charts, and the candlesticks. Now, the one that is very popular is the use of candlesticks, and that's the one that we shall learn more in detail about. But we shall also understand the bar chart. So this is what the bar looks like. On here on my left, these are the bars. So it's more like it's not chubby, but it's skinny, and it has one arm on the left and one arm on the right. So the arm that is on the right shows you the closing price, closing price, and then the one that is on the left shows you the opening price. So if price opened at a particular point, this is what this figure shows, and however it moved, and then at the end of it all, it closes, so it shows you the closing price. It's the same with this one. It shows you, so meaning with this one, the closing price is just above here, and then the opening price is above here, and then the closing price is on the right. But these two are different. We have this one, the opening price is lower than the opening, the opening price, sorry. I don't know why I'm having why I'm always making these mistakes. Okay, so the opening price on this one is on the left, the closing price is on the right. So we see the opening price is lower than the closing price. This means this is a bullish bar. So this is what makes a bullish or bearish bar. It's because of the opening and the closing prices. On the other hand, this one, the opening price is on the left, which is higher than the closing price. So this means a bearish bar. It means price opened at a higher price and then closed at a low price, right? This is the bar. So it's thin and it has two arms, and this is what it looks like on the chart. Now, we don't normally use this to trade, so we won't waste much of the time understanding it. So let's understand the candlestick. So the candlestick originates from Japan. I think it was a method that people could use to store information and all that, and it's been adopted in trading. So it's very important, and this is what we'll be using throughout our trading career, unless otherwise, but that's what we'll be using. So now let's understand the candlestick, right? So we're going to start with the parts of the candlestick, right? Yeah. So what are the parts of a candlestick? So this is what a candlestick looks like. This is what you are seeing on the MetaTrader platforms. And let's now understand what each and every part of the candlestick tells us and what it is. So we can see two candlesticks. One is green, one is red. So this is a bullish candlestick. This is a bearish candlestick. So meaning a bullish candlestick has got the opening price lower than the closing price. So let us understand the parts of the candlestick. So this part at the top here, it's called the high, and then at the bottom it's called the low. Now where this is starting from, it's called the open, and where it's ending from is called the close. Now the close and the open make up what we call the body of the candlestick. We'll understand the use of the body of the candlestick later on. So we have the low, the open, the close, and the high. So now the distance between the close and the high is called the upper wick. Then the distance between the open and the low is called the lower wick. And sometimes instead of using the word wick, others use the word rejection. Yeah, right. Others use the word shadow, the upper wick, upper shadow, lower shadow. So let's now explore the bearish candlestick. The bearish candlestick has the same parts, except that the opening price will be above the closing price. So this is the opening price, this is the closing price, this is the high, this is the low, this is the lower wick, this is the body, and then this is the upper wick. These are the parts of the candlestick. So the only difference between the bullish candlestick and the bearish candlestick is the opening and the closing prices. So what makes a bullish candlestick is that the opening price should be low and the closing price should be high. And on a bearish candlestick, the opening price should be high and then the closing price should be low. So now let's move a step further. So that's the part of, those are parts of the candlestick. So regardless of what candlestick you would see, it will always have these parts. So parts of the candlestick, the body of the candlesticks represents the the distance price moved from the opening till it closed. So if the body of the candlestick is bigger, meaning price moved a lot from the opening to the closing, right? If it's shorter, then the opposite is true. Then the high is the highest price that it reached over a period of time. Remember, one candlestick represents a particular time frame. If you're on the 1 minute time frame, that candlestick will represent the 1 minute time frame. You see? So then the low, this is the lowest price point that the market reached over a period of time, whatever time period it is, right? So you have various candlesticks, and these are some of them. Some of them do not have the wicks, while others have, while others are, they are formed in different ways, and really you can't comprehend all of them. What it is that here, since we don't have the wicks, how do you name it? So this becomes the open, this becomes the close. So the open and the close become the high and the low of the candlestick. Then the body remains as it is. Then this one you can easily label it based on what we have learned, and this one has got the high, and then the low and the open is the same, then the close. So you see, it's like that. So then this candle, so they come in different forms, and of course these are bearish ones. Yeah, so the candlesticks can take different forms, but what matters is understanding the parts of the candlestick. Now that is about the candlesticks. That is about the candlesticks, ladies and gentlemen. And of course, we have another thing, which is the line chart. The line chart. This is what it looks like on the line chart. It gives you the same information, but not everything. So we won't really be discussing this because we don't really use it that much. Yeah, so this is what it looks like if you just want to use the line. We only use it when we're looking for maybe patterns, shapes, and all that. So that's about the types of charts on the Forex market. In the next lesson, we shall understand how to interpret the information of the candlestick. So that is it, ladies and gentlemen, and I'll see you on the next lesson.